The global economic system has been wobbling. We've seen some sell-offs inside the major market indices. There has been weakness inside of Bitcoin and also the Nasdaq, as well as a lot of other major market indexes. And we can see Japan's market has been coming down as well. Major market indices have been weakening because there has been an expectation that inflation is increasing. And we can see via the 5-year break-even inflation rate and the 10-year break-even inflation rate. That is realistic. Also, the annual inflation rate is starting to turn around, but we don't have stats on that yet. And if you're ever wondering why your house price doesn't typically get any cheaper, it's because the CPI keeps on increasing. We had some big economic data releases. And how have those releases moved the market? The first thing to understand that the leading indicator of advanced price increase, the PPI month on month, actually decreased. This means that there is deflationary pressure or downward price momentum in terms of the CPI data. And that came out in the PPI month on month as well, a big decrease. And we saw the core CPI come down also. The markets were anticipating that the CPI data would rocket up. And also, we've seen a little bit of weakness in terms of the Empire State Manufacturing Index. But the real headline is that the CPI month on month and year on year came in as anticipated. They didn't go up. In yesterday's data for the stock market, we can see that Meta came down, Tesla, Eli Lilly, Nvidia, Microsoft, Apple, and Amazon also came down. But what did it look like after the data came out? Well, a very, very different picture. CTKS students, what you see here is the VIX decreasing. If you're new to the community, a very warm welcome and welcome back, CTKS family. One thing that you can do, in the link in the description of this video, there's this particular watch list. It will give you all of the data that you need to look at to cross-triangulate what's happening inside financial markets. Inside row 1, which is all about risk, we can see that the VIX decreased significantly. And it brought the DXY, dollar yen with it, as well as the 10-year and the 2-year. This led to broad-based increases across the stock market and also crypto. Row 2 is all about risk on, and we saw some pretty green indications across that, and that supports upward price momentum inside row 3. Row 3 we can keep an eye on outside the US session, and we can see a lot of green inside the major market indices. We've zoomed out on the major global indexes, and we know they're in a little bit of a downtrend. So hopefully we'll get a trend change here and we'll see upward price momentum. But we have to bear in mind every single day what's going on inside the market. Tesla did incredibly well. Good on you, Elon. And when we look at row 5, crypto, very, very nice, very good performance. And you can see market cap of USDT dominance just fell like a brick. This basically means that people were sucking out liquidity from USDT and throwing it into cryptos. And we've seen that inside row 5, fairly good momentum there. Row 6, good momentum. Row 7, looking really good. ADA, Solana, Doge, and XRP. In terms of the memes, they're just starting to come up. One of the things that we realistically want to look at all the time is the row 1 reference. When these particular figures, they're forward futures figures on the VIX, when they come down, that is a really good thing for the markets. When they're going very, very green, that points to a turnaround, a retracement. So when they're red, it means rally. Of course, we can't be too simplistic. It depends what's happening inside the actual charts. We can get a much clearer picture into what happened in the past 24 hours when we look at row 1, which is the VIX, the DXY, dollar yen, the 10-year, the 2-year, and oil. We can see that the VIX just absolutely took a nosedive. The VIX was printing the expectation of higher inflation rates, and when you see oil going parabolic like this, that's not unreasonable. But it wasn't reflected inside the economic data. So we saw the VIX drop down, the DXY drop down, the 10-year, the 2-year drop down. Oil demand is expected to be robust throughout 2025 and 2026, and you know that oil is highly inflationary. So whilst we got a bit of a reprieve now, I would suggest that in later months we're going to see this come back and bite the market, creating volatility. Looking into row 2, which are junk bonds, the euro dollar, the Aussie dollar, gold, silver, and copper. The drop-off in the DXY and also the VIX and the 10-year and the 2-year led to broad-based rallies across the S&P 500, and of course that is pushing up junk bonds. We saw also the major market indices all going for it, and that's what we would anticipate if junk decreased. And we can also see that gold has been favored not just because of geopolitical tension and also economic uncertainty, but when the yields came down, gold was favored, as was silver. So this is pretty good news. The commodities will do well in the next 12 months. It's incredibly important to understand how all the markets intercorrelate and interconnect. If people are just inside the crypto market, or just inside the stock market, or just inside the commodities market, or even just inside Forex, well, that's a little bit different. Forex people are very smart. They need to look across all of the markets. But just say they were just looking at Forex. They'd look at these bumps and humps and try and figure out what the heck is going on. But we know what's going on because we analyze the market scientifically through the cheat sheet. The cheat sheet has 7 rows, and you can pick it up from CTKSmethod.org absolutely free. It'll get you started, and there's some videos there to help you out in terms of filling it out. What we've seen inside row 1, the VIX came down, the DXY came down, dollar yen came down, the 10-year, the 2-year, but oil went up. And members of the CTKS Method service, oil upper boundaries have been released. Junk came up, the euro dollar, Aussie dollar, gold, silver, and copper. So we're seeing some favoritism towards the commodities at the current time. And of course, with junk coming up and VIX coming down, we expect the major market indices to rally. And that's exactly what they did. If the major market indices are rallying, we expect Bitcoin and total crypto market cap to also come up. So if you're looking, for example, at XRP or Doge or Solana or ADA, it depends what happens inside row 5, row 3, row 2, and row 1 for you to understand what's happening with your money chart. And of course, so many people just wouldn't think of ever doing this. That's why they think the markets are manipulated, because they don't understand intercorrelation and interconnection. Your learning is always your earning. So if you go to CTKSmethod.org and just pop down the page, you will see an area where the mastering of price action is. This is the cheat sheet. You can download it absolutely free of charge. And underneath that are some videos to help you out, and the official ticker list for the service is here. So you can pop on that and get all of those tickers by row. To access it, just click the picture. And just a note, for the Profiting from CTKS Method Structure students, Week 4 is coming out, and it's probably been released where you are. Week 1 and Week 2 are all about understanding your foundations and understanding intercorrelations and interconnections between all of the cheat sheet items. Week 3 is how you can make money in any market. And there are a lot of tips and tricks there. You literally look over my shoulder as I go day by day with what I do personally. And week 4 is all about keeping your money. It's one thing to make it, it's another thing to keep it. You need to be able to keep what you make. And to do so requires that you think differently. Not as retail, but as an institution of one. When looking into row 3, which is the S&P 500, the Dow, the Nasdaq, and the Russell, what do we see here? Let's just zoom in a little bit. Well, the first thing is that we can just look here and here. The S&P 500 is still in a downtrend. It's in a downward channel. So that doesn't mean it's broken out and done a trend change, at least not yet. In yesterday's video, we drilled in and I showed you the structural levels around here. There was a lot of structure. It bounced from structure upwards. And of course, the decline in the VIX was the major reason for this, not market manipulation. It's very important to think in terms of waves. You need wave-based thinking. Oh my God, I nearly did a Mike Tyson. If we zoom in a little bit, you can see on the 15-minute that we're staging a bit of a rebound up to that very short-term resistance. Doesn't mean we can get over it. Perhaps. Just be aware that there's a lot of inflationary pressure inside the market. And if you think in terms of waves, it doesn't realistically matter because you know that you can make a lot of money on the green and a lot of money on the red, actually going long at spot. I like to think that anybody can make money in a rising market because a rising tide lifts all boats. But if you can make money going long at spot in a down market and you can make quite good money, that is a superpower. And that's what I teach inside the Profiting from CTKS Method structure course. It's very important that you can do both. You should be able to make money long at spot as prices go up. You can use leverage and derivatives if you like, but just be aware of the risks. And of course, the people who give you derivatives, they make very sure that you sign the terms and conditions, which basically says you can lose everything and more. So it's important to think from your downside risk. If we look at the NASDAQ, we can see it's doing rather well at the moment, but we know this is only a retracement. It is not a trend change. But retail will think this is a trend change. If we just look at the S&P 500 on a daily basis, we can see that we're just coming up to an area of very, very short-term resistance. Now, what happened last time? When we came up to that area, we were rejected. And a lot of retail will be FOMOing like hell right at this point because we're coming up to a similar point right now. Now, we do have a little bit further way to go, so we conceivably could come up a little bit further until we start to get challenged. But always remember, price is always moving in a wave. It's going up and down, up and down. This is just what price does. It's nothing to get freaked out about. It's something to take advantage of. One thing that will really help you out when you know where the support and resistance levels are inside markets and you always think in terms of price waves, always going up and down, up and down. One thing that the wavy nature of price always relates to are the structural levels. So let's just pop those on. These are very specific structural levels. They're formed through Level 1 and Level 2 standard certification, which you can learn yourself. I'll just put some price labels on for you. Okay, what we can see is when gold was rallying like hell and everybody was FOMOing in, there was overhead structural resistance at that 26.98 mark. We got rejected. Now we've sought to come up and challenge it again, getting across the 26.98 level. The yields, the 10-year and the 2-year, and across all the yield curve, actually, they all plummeted down because the hotter than anticipated CPI figures just didn't materialize. So the market went, huh? And as a result, the VIX spiked down. As it spiked down, it drew the yields down with it, and gold absolutely benefited from that. But this 26.98 is still a level where people need to pay attention because all the sellers are hanging out in this 26.98 region. This analysis may look very simplistic because a lot of retail just draws a level across and says, that's the most important line in history. Actually, the most important lines in history are formed from all of history. And that's what Level 1 and Level 2 standard certification do. If we get above the 26.98 level, expect a retest and a challenging of the 27.06. You can see that we've got a positive CTKS gap. That is phenomenal. That means that gold could really go for it. Now, how does gold really go for it in this economic condition? It needs to be accompanied by geopolitical tension, big tick on that mark, and also falling yields and the falling DXY. Service members, if you looked into the DXY chart, you would see a lot of overhead structural resistance. Gold may get its fantasy. When we look at the VIX, we saw that it really just dropped through the floor. This was because the market was pricing in expectations of a huge amount of forward inflation, and that just didn't materialize. There's a very significant Stanfield zone around here. So what does that mean? Even though we sold off past all of this gravitational support, we could get a revisiting and a resumption down if the economy just thinks, oh, inflation is passing. We could also get this kind of behavior if the earnings season is particularly strong. If earnings increase, we would anticipate that the VIX comes down because the stock market goes up based on earnings. However, if we find inflation starting to take off, and we must bear in mind what oil is doing, as a central input into energy costs, oil is coming up and it's coming up fast. Future economic data releases will show that impact, so we could see the VIX starting to regain strength. Just always think, price is always moving in a wave. It's always going up and down, but all the markets are intercorrelated and interconnected. So for example, why am I focusing on this? We're a crypto channel. We look at what happens to Bitcoin because Bitcoin is the canary in the coal mine for not only the stock market, but also commodities. It's a global canary as well. When the VIX spiked up like this, what did Bitcoin do? Please let me know in the comments. And to all the people who commented on learning yesterday, wow, you are awesome. Another thing to just bear in mind is that when we draw a very, very short-term support for the VIX, what do we see? It literally hasn't broken down from support just yet. This is recent indicative price support, but you must think how retail thinks. That raises a question, how were the earnings in the past trading session? And we can see we had positive surprises just literally across the board for the banking group that reported their earnings. And Goldman Sachs beat earnings by 45.57%. So we had a couple of confluences occurring. Good, strong earnings beats, and a failure of the CPI to break out to new all-time highs. Fantastic for markets. In the next 24 hours, keep your eye on TSM earnings. That's going to be really important for the market. And also Bank of America and Morgan Stanley. There are a couple of banks in here that will also, they should follow suit with all the other banks in beating earnings. If they don't, prepare for some volatility. Inside the crypto market, when the VIX fell off the ledge, what did crypto do? It came up because Bitcoin also came up. What did that do to the crypto market? Well, it pushed it all because no alt can escape Bitcoin's gravity. Unfortunately, some people think that if Bitcoin is going to come up, the alts are going to come up by the same percentage. For example, Bitcoin comes up 2%, the alts are going to come up 2%. This is kind of not the case. What we actually see is a gearing relationship between Bitcoin and the alts. And it's good to keep an eye on what the upper bank is doing and the lower bank is doing. Currently, XRP is crushing it, and WIF has got a whiff of success, followed by Solana, ADA, and Pepe, and Doge. A lot of people want timestamps inside these videos, and if you want a timestamp, just kiss your money goodbye. Why, Ken? That's not fair. Other retail influencers do timestamps, so I can jump around and just see what I want to see. Yeah, Yoda, that is why you fail. Just think about this. If you didn't understand what caused this, and you just jump in here and you've missed the VIX, you've missed the earnings, you've missed the CPI report, you've missed inflation expectations because you just don't care about that junk. Who does? We do, because if you know what's happening from a longer term perspective, you can do something about it and you can profit from it. This is exactly the reason I do not do timestamps. And if you want timestamps, you've got to think about seriously what you're doing inside the market. If you do not know why the market moves like this, you're in a huge amount of trouble. And if you look at influencers out there on social media, they'll just say, oh, the market was manipulated. No, the market is not manipulated. The market is intercorrelated and interconnected. It's critical to understand where Bitcoin is going and where Bitcoin's structural resistance starts to hit into play. A lot of people think, and again, this is just a retail thing, but they think $100,000. There's so many sellers at $100,000. There's not so many sellers at $100,000. In fact, their actual resistance is 99,798. We know where the resistance levels are and we know where the structural levels are. And if we manage to get above this 99,798 level, these lines look to the right. They're called CTKS levels or Stanfield levels, and they're the most statistically significant support and resistance levels in existence. We have a positive CTKS gap, but we have a lot of overhead structural resistance around this 102,691 mark up to the 103,373. So if we spike up, if we manage to get and fill this positive CTKS gap, we could get a structural overshoot, and that's fantastic. If the market catches on that oil is just romping up and inflation is going to hit the market sooner or later, we may get a pullback, because remember, the S&P 500 at the current time is in a channel. It hasn't broken out of that channel. It's just coming up to the upper boundary and it hasn't quite got there yet. So we could see a bit of positive price momentum up to around this 103. But always think in terms of wave-based structure. If we can't get above, we're going to have negative structural attraction to the levels below. And these do not act like brick walls. They're a little bit elastic. There's a gravitational field inside the markets as well. And we saw that Bitcoin in the last trading session came down and tested these structural support levels and confirmed them as structural support, and then rallied, did a structural overshoot, and then started to slow down in terms of momentum. Knowing where the structure is vitally important. You could guess, that's fine, but you will over the long term not be consistently profitable because you just don't know where things are. It's kind of like, where did I leave my keys, but doing that inside a chart. We know that total crypto market cap and Bitcoin move together. They influence each other. Now, what do we see in total crypto market cap? At the current time, absolutely nothing, because we need to look at it from a structural momentum perspective. We can see that the entire crypto market cap found support at 3.27 trillion. It rallied up, remember what Bitcoin was doing, and it hit this about $3.339 trillion mark. And it's currently come up to the mythical, like literally 100,000 Bitcoin, which is around that 3.44 trillion. In the profiting from CTKS method structure course, I show you how to read through the charts. It's a very, very valuable skill, practical skill. One thing that we can see underneath or around this 3.49 trillion is a lot of overhead structural resistance. So whilst we might get going, this is going to be a bit of an issue inside the crypto market. In the past 24 hours, there's been around $314 million worth of liquidations, and over 107,000, nearly 108,000 people were liquidated in terms of their positions. We can see the overwhelming majority were short, and that's exactly what causes the prices to increase, because when shorts are liquidated, they create buy-side liquidity and also buy-side momentum. And look at this poor guy or poor gal, $12.61 million in one single liquidation. Ouch. It's very important to keep positive at all times. and every day show kindness, integrity, and gratitude. There is always something to be grateful for and appreciative of. Now, why is this important? Because if you don't do this, you think from a scarcity perspective. Scarcity perspectives are always the hallmark of that, and the foundation of that is competition. When you have an abundance mindset, you just think, I'm dedicated and committed. I either win or learn and never blame. A scarcity mindset always blames because the problem must be outside themselves. But that also puts the power outside themselves as well. Why would anybody disempower themselves? Also, life pullbacks give you the strength for the next life rally. But in a scarcity mindset, a life pullback is God or the universe or whatever you want to say, just causing you grief. The concept is always, why me? We always get these life pullbacks. They're not personal. The rain falls on the just and the unjust alike. But with an abundance mindset, we just look at life pullbacks and we say, that's giving me the strength for the next life rally. That's infinitely a better way to look at it than the world is out to get me. Because it's not. And we know that the universe wants us to succeed. Why? Why does it want us to succeed? The whole of nature is growth and abundance. Look inside any rainforest. There's not scarcity there. Ah, Ken, what about a desert? Well, there's no scarcity of sand in a desert either. I thought inside the comments today we could talk about abundance versus scarcity. I think it's a really, really important topic. Now, why would you want to talk about abundance and scarcity in terms of trading? Aren't we just here to make Lamborghini-style money? Yeah, if you're retail, you are. But if you're professional, you don't worry about the Lambos. You worry about doing the right thing. The Lambos, when they come, they come. And probably by the time they come, you won't want one. Sacre-cœur, how could you say such a thing, Ken? Because when you think correctly, you don't care about what other people view you as, because you're already unique. Nobody can be you like you can be you. If another person wants you to be them, they're confused. You can only be you. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.